Joining us is former Barclays CEO Bob Diamond, current CEO of Atlas Merchant Capital, and chairman of a new SPAC, Concord Acquisition. Bob, appreciate you coming on. And what a day, by the way. We've been going back and forth for a while. I'm really glad to have you on. As somebody that ran a big bank and a big trading operation, when you see what's going on between the Davids trouncing the Goliaths in some respects, at least with these stocks, how do you take it in? What are you thinking when you watch it?
Well, Brian, as you know, I'm a bond guy, so I've watched this probably with more interest listening to you and everyone talk about it today. I think the biggest thing I've done today is try and keep the staff off the screens. Everyone's following it. I'm trying to get everyone back to work.
Do you think this is, forget about, and this is not a knock on the internet or whatever it might be. Do you think that when we talked about 140%, of short ratios on stocks, whatever it might be, do you think this is a healthy market, Bob?
So I haven't really followed it that closely, seriously, as I'm not a single stock guy, but it does look like some single stocks that are somewhat thinly traded. We've seen short sales or short squeezes, I should say, before. So I don't think this is that abnormal in the market.
Well, let me ask you this. As a bond guy, you really care about interest rates. It is the Fed day. You get a lot of people that suggest, hey, if we've got these levels of rates, effectively zero, for this long and longer, and QE and everything else, what did anyone expect to happen but this? Do you think that the Fed and rates plays a role in equities moving higher and bond yields well under, at least they were, 1%?
So I think it's all of those things, Brian. So the Fed has been very, very focused and very, very concerned about doing everything they can to keep liquidity in the financial markets, to encourage the Treasury to provide fiscal stimulus, and everything really relies on a efficient, successful rollout of the vaccine over the next 2 to 3 months. And I just don't think the Fed is going to let up, and we'll hear more about that today. And if they go a little bit too far, is our economy in the U.S. and globally better off? Absolutely. It's much better off if they go a little bit too far to make sure we get through the rollout of the vaccine than if we were a little bit short before we went out. So sure, there's some liquidity in the market.
With rates,
we've seen that in houses. We've seen that in bonds. We've seen it in equities. Some of the valuations they're not necessarily too high, Brian. I think the way I would say it is they're high relative to the stage of the recovery. So the markets are discounting that we're going to get through the vaccine rollout and begin a quite strong economic recovery.
Shepard Smith here. Thanks for watching CNBC on YouTube.